Going very long, one particular currency. We bring him in now. Wilbur Ross, W.L. Ross Company Chairman and Chief Strategy Officer. First, before we give away the goods here, how bad does the breakup get?
Well, I think it could get very ugly, but I'm beginning to wonder whether it will actually occur. It's fascinating to me that the leaders of the Leave movement, namely Boris Johnson and Farage, both opted out. So did Gove. So here you have the people who lobbied for Leave not having the courage to be there to try to implement it.
Doesn't that worry you? That to me is a screaming sell signal.
Well, what it tells me is that they never thought they would win. It was just all about political things on their part. They had no plan at all.
That's depressing, Wilbur, isn't it?
Well, it is. Now, Miss May, I think, will be very good. She's likely to be the new Prime Minister.
Theresa May, yes.
She was for Remain. But she's a very sensible, very level-headed, very experienced person. So I think they've come out of it okay from a management point.
I'll tell you what looks like it came out of it, at least for now, okay. The FTSE 100, that's sort of the Dow Jones Industrial version, right. The UK version of that. However, the biggest gyrations have come in the British pound. And we can show people that British pound right now because depending on what it is. Can we put it up, please? It went to about $1.29 yesterday, right. As we saw. And you can see the big drop-off here. Can we show what it's doing right this second because it's important, I think. So we see $2.2895. It's only getting worse. What currency are you buying into, Wilbur? Well,
I've been buying some pounds. This is personal, not in the funds. Our funds always hedge back to dollars. So our UK holdings, while the price of the shares is a variable, the currency is not something that we have to worry about.
People say this is going to continue to go down. Why? Because the UK may very well no longer be a financial centerpiece of the world.
I think those are a little bit exaggerated. I think there'll be some people leaving there at the margin's edge, but I doubt that they will all vacate. And I especially doubt that a lot of the other services will. You know, services are something like 80% of the UK economy.
But we all know all roads lead back to the financial industry and, of course, the so-called area, Canary Wharf, where all the big international banks are. You know, euro-denominated securities will no longer be allowed to clear through London.
Yeah, and that's something that the Leave people apparently didn't even focus on. I'm not even sure they were aware.
It's unbelievable.
But, look, the Leave movement was an emotional thing. It was anti-immigrant, anti-refugee. It had no economic basis.
Let me play the other side of that. Some people said it was just trying to fight back for a country that would give them the jobs that they felt that they had lost because the European Union is such a gigantic bureaucracy and was dragging down what has been a sterling nation in the world, and that would be the UK.
Well, but the reality is that the UK economy has been doing fine. That's the other reason I was shocked that they voted to leave. If something's not broken, you shouldn't try to fix it.
They're now saying, though, it had 0.6% growth for the Q2, that may drop to 0.2%. That's almost recession territory.
Well, that's true, but that's because of the uncertainties coming out of the Leave referendum.
Do you see a financial job exodus before we go? Do you see Goldman Sachs and the bigwigs of America that have their headquarters, in fact, Goldman trying to build one there, pulling out?
I think there'll be some transfer of people because folks will want to hedge their bet. But remember, nothing's going to happen tomorrow. Once that Article 50 is triggered, it then will start something like a 2-year clock. So the worst of this is the uncertainty that will prevail for quite a while.
Wilbur Ross buying the beaten down pound as he winces. Good to see you. Thank you so much.